Hello and welcome to Law of Money with me, Vivek Law. Today we are going to put the spotlight on tax. It's an issue which scares all of us, and it's an issue which is topmost on our mind. How do I save tax? Joining me over the next few weeks is Kuldip Kumar, who is the partner and personal tax lead at PWC India. The other issue I find a lot of confusion or lack of awareness that people have is about the fact that if my money is lying in my savings bank account or in an FD, where most of Indian household savings lie, we tend to feel that the returns that I get are not taxable. Somewhere when we sit down and make our income statement for filing our returns, we tend to ignore the fact that whatever interest that we may have got, of course, banks do deduct a TDS and then it probably goes to the 26AS in any case. But just to clarify to people that is all interest on your savings bank account or on your FD, is it all taxable with a certain exemption? Can you clarify on that?
Very good question again. This is one of the common mistake which happens. So first of all interest which you earn either from the saving bank account or from the fixed deposit, that is taxable. Now there are also where the amount of interest on the fixed deposit, on the term deposit is more than 10,000, then the bank is mandatorily required to do the withholding on that at the rate of 10%. And if you do not provide your PAN to the bank, then they will deduct the tax at the rate of 20% or the applicable rate, whichever is higher.
That's one more reason to have a PAN.
Yeah, that is another one more reason to have a PAN. And the second is that, so if you are having a interest income from the saving bank account, so up to 10,000 rupees, you can claim a deduction under section 80 TTA. Okay. So in other words, you will need to include your saving bank account in your taxable income, and then you will need to claim a deduction for the same up to 10,000 rupees. Okay. Now, if you are having a fixed deposit, now please take note of that. If you are if you are falling in a taxable bracket, the bank is only deducting 10% of the tax. So assuming that if you are falling in a bracket of 20% or 30%, you also need to pay the additional taxes on that. Okay. And where the tax payable is more than 10,000, you also have a advanced tax liability obligation on that. Okay. So you should take care that if you are having a fixed deposit with the bank, so you need to include those in your bank account, and you also have to discharge the differential tax liability which may arise on account of that interest income.
Thank you very much, Kuldip, for talking to us here on Law of Money and clarifying lots of issues that concern people as far as their tax is concerned. We'll keep this conversation going. Thank you very much.
Thank you.